Hey, folks, have you ever made a trading decision based on an old saying, kind of like sell in May and go away?
Hmm.
Well, I don't know about you, but I have. And sometimes that wasn't the best decision to make. But where did that quote come from? Did somebody just pull it out of their butt? I don't know. You know, is it really valid advice? There are many parables like that around the market that could shape your beliefs as a trader. But the question you have to ask yourself, are those beliefs really built on facts? And today, we're digging into those myths and going to separate the fact from the fiction. Welcome to Trading Truth Podcast. I'm Dennis Wilborn, the founder of Autopilot Trading, and joining me is my partner in crime. No, my partner in Mike Lamas from Mara Wealth. So, Mike, what about that concept? Did you ever, when you guys first started trading, did you believe in some of the myths that were out there about, the old sayings and stuff? Or
Oh,
what were some of
sure.
the ones you listened to?
Sure, I've heard all the old adages of, well, sell in May and go away. And, when I found the O'Neill universe, the trend is your friend. I started to hear that one all the time. Let's see, what else? The Santa rally,
Yeah.
right? The one that has to do with however things go in January, so goes the rest of the year. I
Yeah.
heard that one plenty. I heard a lot of these things, and I bought into all of them because if somebody was saying these things, then I presume that it must be somewhat factual.
Sure. Because as we respect the people, maybe it was a mentor or some a more, well, I hate to use the term mature trader, but somebody who'd been around the block a couple of times more than we had, and we go, oh, okay, yeah, that sounds good. And Joe
Hmm.
said that, and Joe's has been in the stock market a long time, so yeah, it must be true, right?
Oh, well, hey, it, if I had listened to people that actually had real experience that were saying those things, I think it would have been a lot better than listening to the talking heads on television that I used to listen to.
Yeah.
My results probably would have been better back then.
Ah,
Yeah, so I was getting information and misinformation from all the wrong sources, like your MSNBCs and your Kramers, or just picking up something in the newspaper that makes for a good headline.
yes.
I used to fall into all those traps.
And so, yeah, I get you, man. I think some of the ones that I would get hooked into was one is an old one from, and we're going to be covering this here shortly, but one was a really old one that was buy right and sit tight.
Oh yeah,
Yeah.
yeah, I remember that one.
Okay. And we're going to be talking today about one where that one came from, but also you want to stay tuned because later in the show today, I'm going to reveal a chart that I have never revealed on a live podcast before that is going to answer the big question: are these old trading idioms or adages actually valid? So you want to hang in for that. Want to welcome everybody. If you have questions for Mike and I, just leave uh, a question down in the chat box. Appreciate it. And let us know where you're joining on. Are you on YouTube? Are you on Twitter? Are you on Facebook? Or are you on LinkedIn? We want to welcome everybody.
Yeah,
And
let us
so,
know if you have a pulse.
what? Yeah,
Let us
know,
know
yeah,
if you have a pulse.
yeah. No ghost followers out there. And
There you
so,
go.
I'm really excited about today's session because as we dug into this, this topic, because we banter back and forth about what should we talk about this week and all this type of stuff. And I think that, when you suggested the adage of, sell in May and go away, I went, okay, that is really good. And I just wonder, what is some of the psychological thoughts, or how can having an adage like that, or an old proverb, like selling May and go away, or buy right, sit tight. What can that do to your belief system? Because we're all kind of hardwired to believe stuff. I think Mark Twain said this.
Mm,
He said basically, um, it's easier to fool a person than to convince that person they've been fooled.
mm. Yeah, that's an interesting one. Here's another interesting one too. And the people in the IBD meetup group would always say to do this one. Write your rules on an index card. Get all your rules to fit on an index card. Have you ever heard that one?
I have heard get your rules onto one page.
Yeah. Yeah. So
Okay.
very similar, right? The core concept there is to keep things simple.
Right.
But well, when I was first starting out, and I think that, well, I'd love to hear from the audience. Let me know if you guys have felt this way. And Dennis, I'd love to hear your thoughts on this too from early Dennis's trading.
Yeah.
So if you're trying to keep things as simple as you can, just get your rules onto one page.
Sure.
It leads to, for me, it led to an oversimplification where I didn't have a robust system. Whereas if I studied everything, right, or like if I went through the normal process to
Right.
study how you have in your book, how I have in my book, and then after attaining the knowledge, then tried to whittle it down, it would have been the one pager would have been far more robust because, at least from my perspective, it would be going from, just trying to, I don't know, make a sand castle down at the beach to starting off with a giant slab and then chiseling away and just taking away all the things that aren't completely necessary to make our masterpiece. That
Hmm.
being uh, our rules.
Uh,
Uh,
s- So is the question, you know, is the question or the comment that we need to start with a complexity, and then then learning and applying our knowledge, and see what works, throw it up against the wall, does it stick, are you, as you develop your edge, once you start to develop and see your edge, your winning edge, that's when you can start trimming away or chiseling away what isn't needed from your rules. Is that what the
right,
kind of
right. Yeah, that's how I kind of felt about it. That uh, it's well, when we're operating it in this way, yeah, we're able to remove what isn't necessary
Okay, yeah.
versus trying to take it and try to fit in what needs to be added. So go get some more sand and put it on, and then it starts to fly off.
Yeah, no, I agree. And what I find that really funny is, we both basically cut our teeth in IBD meetup groups and all that kind of stuff. And meetup groups are absolutely fantastic. The thing that is challenging is I've gone, I think you have, and I both have gone to some of the advanced courses with IBD, right? And
Hmm.
heavens, they have like 27 rules to get in and 27 and 30 rules to get out of a trade, at buy point, A, B, C, D, and this is this buy. And they look at all the patterns they have and that kind of stuff. And I thought, oh gosh, I need to know all that stuff.
Hmm.
And then I just became so bogged down in trying to know all that stuff that I was frozen. I couldn't make a decision to buy, sell, or whatever, because I was sitting there going, well, which rule do I get in with this? Or, oh, and what am I violating here, to stay in? And it was because of that, because of the complexity, that I finally went, okay, wait a second. There's got to be a simpler way. And that's when and this was this was about 15 years ago. It took me 15 years to develop my system, another year to really get the hard back testing in that I needed. But it stripped away all the junk. I mean, it basically stripped away all the junk where I was able to get my rules down. So I had 4 rules to enter, I had 5 rules to exit in the
Mm.
story. Fit onto one page very easily. And the way I tried to design it was I tried to design it in with the person who was still working for a living in mind, because I knew what it was like to work, 12 hours a day in a corporate job, 6 to 7 days a week, and still want to continue trading in the market. And that's hard. I mean, that's
Mm.
hard, especially if I was trying to work with 27 rules to get in and 37 rules to get out. Now, that's
Oh,
maybe a
sure.
slight exaggeration.
No,
However,
it for me it would be an understatement. At one point, I had 100 different sell rules
oh
and
my
about 80
gosh,
or so different buy rules. Yeah, it was ridiculous. I had it all on a spreadsheet, and at the end of the trading day, when I would go to make my decisions, I
sure.
would be like, okay, I'm in Apple, let's say. Oh, Apple is starting to come in. Let's see. Well, what are all the different sell rules? Okay, it's got that one, that one, that one, that. Oh, but there's these buy rules over here because it's coming in towards the 50-day moving average. Well,
Yeah,
we're not quite to the end of the week just yet, so maybe I should wait until to see if we get a bounce or if we close below the 10-week line, and
yeah.
it would just be mass confusion.
Yeah, no, yeah, I get you. I mean, I have been no, I have had mass confusion going ahead in my own head with the monkey talk in my head, just knocking me out, just going about
Mhm.
the rules and all that type of stuff. Until I finally came out with my motto for my business, for my trading, for autopilot trading. It basically is clarify, simplify, so you can multiply.
Mm.
And that in turn turned out to be, I think, the turning point for me to become a successful trader. And that was when, that's when my trading changed. And then we started applying those principles with the simplified rules back 13 plus years ago. And heavens, we beat the S&P, every year for the last 13 years with an average return of 37%. So I'm per year. and so, yeah, I'm really, it was I think I had to go through the stuff and go through the believing the partial truths from some of these old sayings to basically be able to, like a sculptor, chisel away what didn't need to be there to reveal the beautiful statue underneath.
Mhm.
That was really poetic, don't you think?
Oh yeah, you're a
So
poet and you didn't even know it.
I didn't know it. And so, what about you guys out there? Have you ever struggled? Just a yes or no. Have you struggled with having too many rules? Because I find it kind of goes both ways, Mike. People struggle with having too many rules, which leads to confusion, and at the same time, not having enough rules, especially when it comes to things like stop losses and taking profits, that
Mhm.
that they're basically all very impulsive, compulsive type trading off emotions and all that kind of stuff. And it winds up, unfortunately, with a lot of operator error and losing money that they don't need to lose.
Mhm.
Hmm. And so, what are
Well,
some of the other? Go ahead. I'm
yeah,
sorry.
no, I was just going to say that. Well, what's the additional stop loss rules that you would think of. To me, when I think of a stop loss rule, I think, well, I should figure out where my stop is going to be before I even place the trade.
Oh, without a
And
doubt.
that solves a lot of problems. But beyond that, well, what other rules would you say?
Um, I think part of the rules is also, yeah, you figure out where your stop loss should be, and there's
Hmm.
various ways of doing that that are good business practices, better business
Hmm.
practices, right? There's the 5 to 6% rule, there's the 7.5% rule, but then on the flip side of that, assuring that my profit targets are well established to give me a 2 to 1 reward risk ratio as a minimum. So, in other words, what that means is if my allowable stop loss is 7.5%, well, my first profit target had better be 15. And
Right.
I had better take profits at 15%, at least partial profits.
Hmm.
And so that's one. Secondly is the rule of, if I fail to put in my stop loss, guess what? That is a crummy trade. That is but that is a piss poor trade. Why? Because if you fail to follow your rules, that is, I won't say it's a big no-no. It's just setting you up for failure in the future, because you want to do those little tweaks to say, oh, well, I really don't need the stop loss here, or that your price action is coming really close to your 5% stop and it's at 4.5%. And so I'm gonna increase my stop loss just a little bit. And what they call people who can't use stop losses?
What do they call them?
They call them buy and hold traders,
Mm.
or buy and hope. I guess we should say buy and
Yeah.
hope.
Yeah, I used to be one of those. It didn't work out too well.
No, I mean, people, I think that's part of what you and I need, are working together to do, to basically share just the pain points, but where we fell into the hole and took us a long time to dig ourselves out. Well, we are now out of the hole, doing well, being profitable, and we want to reach down and help other folks. One, hopefully not have to reach down so far, but we're going to say, hey, there's the hole. Now, if a person goes on blindly and just goes ahead and says, what do you know? You're the ancient trader, man. What do you know? Or, oh,
Mhm.
Mike Morrow, Mike, what
Yeah.
does he know? And they fall into the hole. Such is life, I
Mhm.
mean, there's no account for stupid.
Oh man. So, what are some of the other adages that you
Okay.
came across here?
Well, we've got a couple, and what I'm interested in is what on these adages, what false beliefs can also be created by some of these adages. And here's one that we hear all the time. Okay, buy low, sell high.
Hmm.
Now, on the surface, that goes, okay, yeah, that makes perfectly sense, and you just kind of accept that. But it possibly can hide a false belief that it's easy to perfectly time the market.
Mm.
And what are some of the, like I said, so what are some of the emotional side? What's the emotional side of that? If I firmly believe it's easy to time the market, where the fact is, timing the market can really be quite challenging for us swing traders.
Hmm.
And if I have the belief, well, it should be easy, and it turns out to be hard, what does that do to me? What does that do to my beliefs and my psychological mindset?
Well, well, when I originally had started out as a value guy when I first came into trading. So this belief of buy low and sell high would cause me to miss out on a lot of the moves and a lot of the quick moves, right? So, for example, June was a fantastic month for me, and uh, I was in Nvidia. Nvidia ran about 50% in the span of 6 weeks. But in order to buy that one, you have to buy near the high,
Yeah.
right? It was already, maybe about 5% or so off of its high. Well, when it started to break out and then move back into new all-time highs.
Right. Right.
So, well, with a belief like buy low, sell high, you're just like, oh, this thing is already so close, it's already gone. Well, how is a stock if a stock is priced at $10 and you think that it's going to go to 100? Well, how is it going to get to 100? Well, first it has to go to 11 and then 12
Right
and
on.
13, and every single time it's at a new high. So it's a lot better to buy high and sell higher. And that was one of the first things that I learned from O'Neill.
Yeah. Great. And so, and since I'm not a breakout trader, to me, I still, believe it or not, I still kind of like that buy high and and let it go higher. Still kind of tightens my jaw a little bit because I love to trade pullbacks. You know that, and
Mm.
I've done very well with that. And that's where my direct mentor was a pullback guy, pullback option guy, and that worked really well. But yeah, and that's really good. That aspect of sometimes you have to be looking at the opportunity to after a breakout on buy high so it can go higher. I think we're looking at something like that right now with like Tesla. Tesla is doing a really great job. And that's just a reminder, folks. If you want us to take a look at a couple of stocks at the end, Mike and I will do that. Plus, we have got that special chart that I've shown to nobody, but you're going to be the first ones to see it. You want to hang around to the end. So, what about the one that the trend is my friend? What are your friend? How valid is that?
Oh, that's another one that I think that I heard that one in the IBD groups, and I want to say that that was a Jesse Livermore quote too. Well, yes,
Well,
no. What do you think
well,
about that?
I think it was, but also Bill O'Neill
Mm.
stipulated in some of his books. So yeah, it's been
Well, one of the things with the trend being your friend, part of it, the thing that I struggled with that one was, well, when does the trend bend? Because the trend always bends, right? The
okay,
trends don't go on forever. Eventually,
right?
they turn. So at what point do they turn? And at what point do I want to start to get out of that turn? And
Okay,
that's part of why I went into my beliefs about money
mm,
and my risk tolerances and my goals and objectives. Because if the trend is my friend and I want to continue to follow this, so let's just say that let's use the Nvidia example. And
right.
let's say that, all right, it's up 50% in 6 weeks. Well, it's still in a trend. Well, so I'm going to look at this on a weekly chart. Well, it's still above the 10-week line. Nothing to do yet. But in sitting through a pullback, you might have to sit through a 10% pullback, 15% pullback, a 20% pullback, and
Yep,
sometimes they bounce off of the trend line, or whatever that happens to
right.
be. But sometimes they don't, and you end up giving back all that money. And I would sit there, and it would happen more often than not, where I would have a significant gain, give the majority of it back, and then say, well, there goes a couple of months of sitting through this pullback, and instead of having a 30-40% gain, I'd walk away with a 10% gain, and I would pout and back to the drawing board. So it was from there that I started to find more of the swing trading route. And
Okay.
it was at that point that I discovered Mark Minervini's work, and that ended up being uh, fantastic.
Yeah. Yeah.
It's
So
much more in
it,
alignment with what I was trying to do.
the on the one of the things on the trend is your friend that always kind of hit me, or well, I discovered this is which trend. There's the short-term trend, there's the intermediate trend, and there's
Mm,
the long-term trend. So which one is my friend? And again, it gets back to the question of timing. If I if the long-term trend is telling me, hey, you should trade to the upside, then then I may have to wait for the short-term trend to actually reverse and change its structure from a downtrend to an uptrend, because the shorter trend is going to show you your pullback. But I think that we can both agree that it's critical to have a line of demarcation or a line in the sand that says, okay, if I'm up X amount, let's say 40%, how much are you willing to give back? Because you hit on something very important, Mike, is the aspect of if you have been, the trader, you in this particular case, or me, or the folks out there, the value of your time to kind of nurture that position as it goes up to like 40, 50%. And all of a sudden, pow, it starts to do a pullback. Well, it's a proven fact that typically a stock will fall at about 2 to 3 times as fast as it goes up.
mhm.
Yeah.
Yep. Yeah, it
And
takes
so
the stairs up and the elevator down.
that's right. And
Yeah,
so
add that to the pile.
pow, you're knocked out of a part of your earnings. And I think that part of the thing, we're going to talk about it just here briefly, is, well, what do you do to change the script on these old adages that may be shaping your belief system in a way that is damaging to your account? Is how do you change the script to say, oh, wait a second, yeah, if I have a 20% stop loss on everything,
Mhm.
then I know I'm protected. That means I get out with at least 20% profit. Or maybe you just trail at 20%. And that way it goes up 50%, you've at least captured 30% of the profit. And add to switching the scripts in, I can always get back in. I can get back in and buy again, because there seems like there's this really big hang up out there of
Mhm.
of I can only buy it once. And there's this no concept whatsoever of, well, if I buy 100 shares, it's okay to sell 25 when I hit a certain
Mm.
profit target, or maybe sell 50 shares at a
Right.
certain profit target, or maybe I sell the whole thing with the expectation that if it comes back to me and gives me another buy trigger, I want to jump back on. Some of my most successful trades have been when I traded one single entity 3 or 4 times during the year. Example, this year on TQQQ,
Mhm.
we've traded it 4 times. 4 times. Our compounded interest rate on the 4 times we've traded it is a little bit over 72%.
Wow, that's great.
And that is great, right? But if I would have just not, we traded TQQ once this year, and that's all we're going to trade it. That would be one, like, that old, here's another old adage, cutting off your nose to spite your face, right?
Yeah, right?
and and that's exactly what that would be. And I think part of the thing is, as we change our mindset and that type of thing, is we get our heads screwed on straight, and all of a sudden we start saying, oh, you mean, and I could trade this like up to 6 times during the year and have a compounding effect of 15 to 20% every time I traded it. And the answer to that is yes, but I wouldn't have known that if I hadn't gone back and researched TQQQ and
Mm,
also been open-minded enough to discard some of the adages that are out there, like trading leveraged ETFs is dangerous, and oh my gosh, you don't want to keep doing that. And because there's a lot of warning signs out there. However, if you establish your risk and you know what your risks are and you respect those risks and you use your stop losses, you use your profit targets, TQQ can be traded safely, as we've proved year after year after year after year, to help us. So, what about? Let's go. What do we want to look here? What about that aspect of the January? As January goes, so goes the year.
yeah. So that one, January's market performance predicts the entire year's trend. That just seems completely ridiculous. Like, who knows what's going to happen tomorrow versus what's going to happen a year from now?
Yeah, yeah. And so, well, one of the things that in reality, there is, I guess, there is a statistical thing that says if the first 2 weeks of January is profitable, then the rest of the year is, has a higher probability of being profitable. But, and well, should I say, but or and one needs to also take into consideration of you trade the chart in front of you and
Right,
let that price action tell you how and what to do,
right. And
right?
if it works out that uh, that it follows this adage of as January so goes the year, and if it's a profitable January, you end up with a profitable year. Great, even a blind squirrel finds a nut. But
Yeah, exactly.
trade the chart in front of you, and we'll see if we find the nut or not.
And so, yeah, I agree. The couple of other that I love this one. Because I lived through the crash of 2000, right? And the crash of 2007/8.
Hmm.
And I'm always listening for this statement. Because to me, what this statement does is it actually is a counter trend, or not a counter trend, but um, ah, it's where you're taking the opposite side of things. But it's the statement. This time it's different.
Mm, yeah.
And I remember that during the dot-com bubble, that people were just saying, "Oh yeah, companies don't need earnings this time. It's going to be all magic and poof and all that kind of stuff." And then, bam, um, it you know it the downturn hit, and my study of what happened back in 1929, before the Great Depression, was also the same type of, well, this time it's different. Oh, the good times are going to go on forever. That's why I call them the roaring 20s, right?
Mhm.
But bam, it falls down. Valuations were overstated and this type of stuff. And same thing for um, the bubble. I mean, bubbles happen, but why do we so blindly just disregard bubble? So what do you think about that? This time it's different. Have you
Well,
been
I
impacted
think
by that?
it that one it's so alluring because it's true. It's true that this one is different, right? Like each time is different. So yeah, this time it's different. Well, this time there's Roaring Kitty, and that's why GME is gonna keep on going up to infinity. Well, you know what? Like the same things of hope, fear, and greed still play themselves out in the market, and you could see it manifesting itself right there on the chart.
Yes. Yes.
So yes, this time it is different. This time you've got the Reddit crowd driving it instead of, a bunch of people standing in a pit somewhere, like bidding up price. But it's all the same stuff. The human nature of it never changes, and
Hmm.
that's something that I've seen play out again and again and again.
Yeah. 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 Without a doubt. But like I said, I listen for that, Mike. If I hear commentators, and I don't watch the business channels whatsoever, uh, but occasionally you get a little news clip, right? That pops up on social media or something like that. And you hear a talking head say, well, this time it's different. And whenever I hear that, and of course, this is my bias, and I have to be aware of my biases, right?
Hmm.
But I kind of go, well, we must be near a top because that happens to be lingo that goes around a lot. So let's see. Any of those other ones jump out at you?
I don't know, but I just had a thought about all these different adages and like how Mike of say 20 years ago would have taken the adages versus how Mike of today would
Hmm,
take the adages,
that's good.
and it it's almost like I think in order to make any of these adages, because there's some wisdom in there, but because it's just this little bite-sized thing, it's almost like getting the free samples at a mall, right?
Mm,
Like what you need is the full meal to really understand what any of these adages are.
right
And
on.
then you could really understand, like, okay, that's what Livermore meant when he said buy right and sit tight. But if you're just coming along and you pick it up and you taste, oh, well, that tasted all right, and you just go on your way, oh, buy right and sit tight. Well, I just bought this and I'm gonna hold Bitcoin from 70,000 forever. And well, what's it at now? 63, 64, and maybe that's okay, but are you okay sitting with it if it goes down even more than that? Well, what's your intention?
Yeah, exactly. Yeah, what is Bitcoin doing right now? Huh,
Yeah, it's at 63.
okay.
Uh, but so, and that might be perfectly all right for some people, but I think that the main point is that we can't live off of any one of those little samples from the mall.
That
We
is
need the
such
full meal.
That is an absolutely fabulous analogy, just that little, it's like going to Costco. We go, my wife and I jokingly say, yeah, I'm taking her to dinner. We're going to go graze at Costco. Uh, and, and, uh, and since I've become more of a carnivore, most of the stuff they let you graze on carnivore on at Costco, I can't eat anyway. So, but no,
Mhm.
yeah, the deal about Jesse Livermore is that buy right, sit tight. That's something I have heard so many times, and the danger. Okay, this is danger, danger. Will Robinson of that statement is a lot of people think they're buying right when they're actually buying wrong.
Mm.
And so then they apply the second part of that. So I just have to sit tight. And the fact is that because they did buy wrong, that the trade goes against them, but they go, well, Jesse Livermore, the greatest of all times, he said to sit tight with your decision, which is a flagrant violation of your rules if you have your rules. And you have to
Right.
remember that Jesse had issue. I mean, he had problems even following his rules because he blew up like several, a couple of $1 million accounts. And the last one he didn't recover from and he committed suicide. So we have to remember that while, yes, this is great, old time wisdom, there needs to be a way of of establishing, is the wisdom still good today, or do I need to flip the script per se? So, what are some of the things we can do to flip the script on these old adages?
If you're going to subscribe to any of them, go deeper into their meaning.
Right on.
I think that's the biggest thing. It would be just like if you were to hand me your one-page list of trading rules.
Right.
If I didn't know anything else about you or your system or your background, I wouldn't be able to trade those rules, and they would have little meaning to me because I don't have the real meat of it.
Yeah.
Like I need the background information so that way I can not only see what your rules are, but I could see them from your perspective.
Sure. Sure.
And I think that the same thing could be true for any one of these adages.
Okay. So,
Well, what are your thoughts?
yeah, I agree with that. I think that, I think that, we should, one is try to put yourself in a position of understanding what the assumptions were made by the person who originally made it. And
Right.
oftentimes we take it out of context. What were things like back? Because some of these old adages are over 100 years old. Okay.
Yeah.
Well, what were
It's
things
still a
like?
man go away one, right? How old is that
Well,
one?
yeah, we're gonna get there. Don't
Oh,
give it away.
mm,
We're gonna be chatting about that one shortly. But yeah, the great thing, selling man go away. Well, we're gonna discover where that came from. We're gonna be looking at that chart to say, hey, uh, maybe that's not a great idea. But I think that part of the thing is we need to challenge ourselves. Why, and ask ourselves questions like, why are you believing this? Have you really proved that this particular case, this particular thing is accurate? And then start replacing those beliefs by stated beliefs. And it's okay to talk it out loud. I mean, talk to your, and say, Dennis, why are you believing that when it is proven over and over again that it's not necessarily true? And here's the reasons why. And then I can start journaling that and start at least rolling that into my considerations with my rules. So then I can then practice and reinforce my new script. My new script, as we said, is let's say it's buy right and sit tight, is the way I buy right is to follow my rules and my entry rules. And if I've done that, now I can sit tight until, this is right, rewriting my rule, my script, until I hit my profit or my stop loss. Then I have a more complete picture of what the adage should be for me in the way I trade. What do you think?
bingo.
Yeah.
That's exactly right. And that's how so to you, you might have that understanding. And so when you write buy right and sit tight, all that stuff is already baked in there.
Yeah. Yeah.
Right. And that's how you're able to get it onto the one pager. Somebody else that comes along, oh, buy right and sit tight, without all that knowledge that you just shared, they're the ones that are, just buying when they decide to buy and then holding it for forever. And yeah,
Exactly.
so the background, everything that you just said is what people need. And I
Cool.
saw a couple of people just hop on, so you guys are going to need to hit the rewind button and watch
Yeah.
the recording too.
And speaking of rewinds and recordings, these recordings are posted not only to the YouTube channel, but also over on Spotify. It's Spotify,
Yes.
right, Mike?
Yep.
And we'll send out the link for that also. Please, if you will, don't keep it to yourself. Share that Mike and I are doing these podcasts on the Trading Truths, where we want to be debunking stock market myths If you have a stock market myth that you'd like us to debunk or at least take a deeper dive into, please send us an email, leave a comment in the comment section on the YouTube. And no, I'm not winding down. So we're not over yet. So hang in there because we still want that chart we're going to show you.
Yeah. Hey, Dennis,
But
do you want me to share the link to Spotify?
that would be awesome, Mike.
Yeah, here, I'll put it in the chat. I think it's going to pop up under your name, though.
Okay. There it is. Yep, guys, just grab that. And again, help Mike and I get the word out. I mean, basically, our goal, our objective is to reach 100,000 people over the next 12 months to help them both understand the stock market a little bit better, become better traders, and perhaps get them introduced to our Lord and Savior, Jesus Christ. And so if that bothers you, that's okay. But that's what Mike and I are about. We want, like I said, we want to reach 100,000 people, and you can help. So Mike, let's circle back to one of the most well-known adages in trading: sell in May and go away.
Yes.
That is not a complete statement. The original statement was sell in May and go away, come back again on St. Ledger's Day. That was the original statement. Did you know that?
No, I had no idea.
And what St. Ledger's Day was back in, like, St. Ledger's is a horse race in Great Britain that started in 1776.
Wow.
And so how long has this statement been alive? We know at least toward at the back in the early or late 1800s, early 1900s is when it's over 100 years old. But that was the deal. It was basically, it told the British elites who would go to the country for the summertime to sell in May and then take your trades off the table and then go away until mid-September. So that explains the contextual aspect of this. But is this still a valid thing to do? And I'm glad you asked that question. And here's the chart we promised we would show you.
Okay, so what do we got here, Dennis?
Okay, Mike, this is a excuse me. This is the chart that I pull that shows seasonality. Now, what is seasonality? We all almost instinctively know that the stock market prices go in a pattern. And this is for the NASDAQ 100. And what it does, it has done is it's basically on a percentage, starts back here in January, but January 24 years ago. So this trend, this tendency that we see on this chart, basically, and I've looked at the same seasonality chart from 20 years before that, or 40 years, and it follows the same pattern almost, well, every year. There's slight deviations in it, but check this out, Mike. Look at what happens here. Is we have the price action starting off in January, kind of goes up a little bit initially, right there, and then we sell off. And so but basically, we've kind of just gone sideways to the middle of March. And now how do you use this chart? And I think that's a really good thing. You think is this can explain why during the first couple of months of the year, maybe you have lackluster performance in your
Mm,
stock picks and all that kind of stuff because there's just no impetus, whatever. There's a tendency for the market to be kind of flat during that time frame. And I know I've noticed that on my own trading, that
mhm.
even though I'm trading individual stocks, sometimes they don't get as much juice as I would like them to have.
Right,
But
right.
then, but drum roll, please. Here's May, right? So sell in May and go away, right? So that's that. There's what happens if you sell in May and go away. But look what happens towards the end of May. We start a uptrend that runs all the way till the end of, or the first part of September, last part of August.
Mhm.
And so you've missed out on, and this is about a 8% on average return from there to there. And
Right, and
so,
if you're trading the triple Qs like you are, it's a lot more.
yeah. And so, but look at what, go back in time even before that and check this out, Mike, is that if I go back over here to the last part of March,
Mhm.
what does this chart tell us? Well, look at that. That's a nice little uptrend that it's taken off on. What happens mid-March to make the market go up?
What happens mid-March? You're asking me,
Yeah.
no idea, I'm not biting on that one. What,
Oh, come
what's the
on,
magic
come
thing?
on.
What is it, St. Patrick's Day?
It's
What are you talking?
St. Patrick's Day. That's a market mover, man. No, people start focusing on one. A lot of corporations are finishing up their taxes,
Yep,
and
you're right.
and people are also finishing up their taxes. But the folks who haven't been contributing to their 401ks or their retirement accounts
Mhm.
throughout the year, all of a sudden, so I have to do catch up. And
Okay.
so that's part of what starts driving the market up, and then it continues on from there. Now, again, notice there are dips, 3, 4, 5% dips all along the way, but a couple of the myths that we've been taking a look at today can be addressed right here. The January, what January does tells what the rest of the year is going to be. Well, doesn't really, make a difference. 2 is sell in May and go away. We've got that taken care of as that doesn't work either.
Mm.
Good news for, and then sit tight or buy right and sit tight. Well, do I really want to go through that? So when this tends to happen, weakness in the September is the worst performing month of all the months in the market. Around the middle of the first part to the middle of October, you start getting your year-end move up. And now sometimes that's a really nice little rally. What is it? On average, it goes up from about 108 to 116, about 8%. So you get about an 8% move here, and then another 8% towards the end of the year. Now, what about that Santa Claus rally thing? Well, there's the Santa Claus rally, and it tends to happen on a year basis, and it's normally about a 3, 4, 5% run on the NASDAQ. So, any other myths, Mike, that we can dislodge with this chart?
Oh man, I think that you covered a lot of them there. I'm just gonna flip through this real quick to see. Well, you can't go broke taking a profit. How about that one?
So, yeah, what about that one? I mean,
Well, I
um,
guess it all depends on when you take your profit.
exactly. I think it goes back to the adage of goes back to, are you carrying a reward risk of 2 to 1, or better, because if you're taking a 0.5 reward to $1 risk, you can take a heck of a lot of profit, and one loss will rip your heart out.
Yeah.
And so,
You don't want to fly upside down.
So let me go back to us together. Where are we at here? I gotta find the darn thing. Well, where is it? Hold on a second.
Yeah, no, we've
Oh,
got
I know it. No, I know it.
Watching us live. I think that maybe we should start giving out some prizes for people that give comments.
Yeah.
What do you think about that? Because I'd love to hear from people. I like hearing from people.
So do I. And so, so guys, we've got we're going to be on for about another 2 or 3 minutes. And so what's your thoughts about, do you use the seasonality chart? Yes or no? That's simple. And do you have a stock that you want to take a look at? Yes or no? And type in the so the seasonality chart, pretty interesting stuff, right?
Yeah, absolutely. I for a very long time I dismissed all of it. I was at the point where I bought into it, then I started to dismiss everything and just think about, well, everything's going to show up on the chart anyway. So trade the chart that's in front of me, and if the setups are there, I'm going to take the setups when they're there, and that's basically it.
Okay.
But I do think that it's interesting to factor in this, or at least have an awareness of the chart that you just showed.
Yeah,
I'm very glad that we did this, because you gave me some new perspective. So thank you, Dennis.
Well, you're welcome. And yeah, that's it exactly. Is it gives you a perspective. And I mean, I don't use that for, to time my tradings. I don't use it that way. All it does is it shows me a tendency, and also if you know there's a tendency for the stock market, or especially the indexes, to be moving up during a particular time of year, then maybe that helps in the way you say, okay, well, then I will be maybe take larger position sizes. Again, all within your trading rules. And the other thing is, you can find these, what's really cool, you can find these charts. You can find them for all of the indexes. Every index has its own seasonality, personality. That's what it was. Also, take a look at the industry groups. Take a look at gold, take a look at oil, take a look at the biotechs. Every single one of them has their own profile, if you will. And so that can help, especially if you're a investor in leverage ETFs. Think about that, okay? To help, help time your moves.
Very interesting.
So, okay, Mike. Well, we are approaching the hour. So, do you have anything else?
No, that about does it for me. How about you?
The only thing that I have is, to let everybody know, join us next week when we'll be debunking more stock market myths. And remember, hit the subscribe button, and also please share that Spotify link with everybody who's out there. And there will be a link that provides both Mike and my best-selling book in the description on the YouTube channel. And so for now, we'll say aloha, God bless. Mike?
Oh, yeah. And if you do check us out over on Spotify and you click that link, leave a rating. Leave a 5-star review, because that's going to help more people discover this podcast. And if you're a fan, and I assume you are, if you're sticking around for the whole thing, you'll help us reach a lot more people. So please do that, and thank you.
Excellent. Okay. Aloha, everybody, and
All
God
right.
bless.
God bless.